If you see me looking over there a lot during the course of this video, it's because there is a very big spider on the outside of my bedroom um, window. So I want to talk about how to use Bollinger Bands for day trading. In a previous video that I did on Bollinger Bands, I talked about how I use Bollinger Bands for swing trading, which is um, when you buy something over here and you follow it as it's having dips over the course of several days. But for day trading, it's a totally different story. First thing we want to look at is, as I've talked about, day trading is gambling, but we use a few confirmations to make our otherwise random gamble more of an educated gamble, and that is how we use charts. So over here we have Ameritrade. This is Ameritrade's Thinkorswim platform. I have these studies. Now, if you go over here, look at all these studies. I mean, if you want to talk about how they talk about how you can't trade stocks on your own because it's so overwhelming, this is what people are talking about. Look at all of these different patterns and studies. It's ridiculous. I mean, there's dozens, if not hundreds, of these things. I use two. I use Bollinger Bands. I use a Bollinger Band crossover, Bollinger Band close, and relative strength index. This is in there twice for some reason, and I don't really know why. So these are the Bollinger Bands: red, green, blue, I don't know, and purple. This is the relative strength index. Essentially, all you need to know about this is if it crosses this top line, it's overbought. That means there's too many people buying the shares right now, and it's due for a pullback. The opposite is down here. It's oversold. It means too many people have sold it. So when we're day trading, we want to confirm and reconfirm and reconfirm and reconfirm. So 4 confirmations on our guess, right? You can't just randomly say, oh, I think the stock is going to go up. Why? Based on what? You know, you have to have some sort of reason behind it. Otherwise, you're just randomly throwing money into shit. So I use Bollinger Bands, Relative Strength Index, and this cool tool right over there called Time and Sale. Now, it's empty right now because it's 10:30 at night or 10:20 and the markets are closed. But during the day, this is lighting up like crazy with red, meaning people are selling, or green, which means people are buying. It's a great tool. It's a great indicator to show you how many shares people are buying at the time and also how many people are buying or selling, right? You hopefully want to see more green than red. So let's look at this chart real quick. This green line in the middle, or blue line, is very important. It's the 20-day moving average, but when we're day trading, what we want to see is that the volume is on the positive side of the 20-day moving average. And as you can see right here, all of the volume is staying over this 20-day moving average. That's huge. Now, yes, there's going to be some selling, but what we want to see is more green than red. So that's confirmation number 1. It's over this line. Confirmation number 2 that the stock is going to move higher is that it keeps breaking out. That's what these little green or blue arrows indicate. I'm not colorblind, I swear. I just am saying green. I know that it's teal or blue or whatever. Keeps breaking out. A breakout is when there's so much volume coming into a stock that it breaks out over this trading range. See, essentially this is the top. The red is the top of the trading range, and the purple is the bottom of the trading range. And anytime you have a breakout, it can be to the upside, like this, where it breaks out and it pushes higher, or it can be to the downside, where it pushes lower. So confirmation number 1, it's on the positive side of the 20-day. Confirmation number 2, it keeps breaking out. Look at all these little blue arrows. Confirmation number 3, we look over here to see how many shares are coming in. Confirmation number 4, relative strength index. So as you can see, it sells off pretty hard. yesterday afternoon or whenever, and it drops over here, it drops below the relative strength index oversold territory, which means, hey, start keeping an eye on the stock. It might be turning around. This is an indicator. It's not a guarantee. So you don't want to base any purchase of shares on one thing, because it could be wrong. It could just keep heading lower. So we wait. Yes, you could buy it here hoping to get in before the turnaround, but that is a gamble, and that's all it is. So here's another example of that. It breaks out to the downside over here. This is an indicator that it's heading lower, but these are indicators that it's turning around. What do? Yes, you could gamble and buy it here at 24.59. You could gamble, but this could be wrong. This down here could be wrong. This is saying, uh-oh. This is saying, oh, good, it's turning around. If you gamble here, it potentially heads lower. This could be wrong. This could be right. You don't know. So what we want is confirmation. So the next thing we do when we see this breakout to the downside is we go, uh-oh, let me look over here and see how many orders are starting to come in. Hey, if I'm seeing a lot more green than red, that's positive. That's a good sign that it's recovering. Now, it crosses over the 20-day moving average. That's another confirmation. That's a good sign too. Now maybe I'm thinking I'm confident enough to take a gamble here at 24.80. Confirmation number 3, it breaks out to the upside. And look, you buy it at 24.95, and look where it closes, 25.11. That's a positive. Now, one of the other things you want to consider is when it breaks out of these ranges and it doesn't go higher, it could be because there are sell orders. In other words, people bought it here, people maybe bought it here yesterday or this morning at different prices and said, if it gets to 24.40, sell it, right? That's all these guys down here. Now it breaks out, but it actually heads lower, probably because a lot of people had sell orders in saying, like, I'm going to buy it here. If it gets to this range, I'm going to take my profit. So we want, just to repeat, to confirm, because otherwise we're just making random guesses. So confirmation number 1, it's on the plus side. Confirmation number 2, it's showing breakout after breakout. Confirmation number 3, we look over here to see that there's more green than red. Confirmation number 4, we look over here. Now, I talked about how this is an indicator that it's going to recover. This is an indicator that it's overbought. It means too many people have bought into this stock and it's ripe for a pullback. Look, it's an indication. Look what happens here. It crosses over this line right here 2 times. Boom, boom. Maybe it's time now for you to take your profits, right? Now I know you're saying, but it broke out here and there's a lot of volume coming in. Yeah, but when it comes to losing money, you want to minimize it, right? That's the goal of stock trading, minimize. So yeah, it's saying that it's heading lower here. This is a gamble, but I'm saying we want to have a couple of confirmations, right, before we get back in. But it's the opposite when it comes to selling, because the goal is to keep your profit, right? To lock in profits. You don't want to be super greedy. You want to take your money. So when I see when I'm buying, I want to see several positive indicators. But when it's time to sell, one is good enough for me. That's all I really need to know. I sell it here at 25.82. I bought it yesterday at 24.63. Now it's 25.83. That's a huge profit for me. And when I look here and I confirm, it's overbought. Too many people have purchased the stock. It's probably going to pull back. That's all I need to see. I want to lock in my profits here. So I hope this video was helpful. Please like, please subscribe, please share this with your friends, and also follow me on Instagram, and have a good night.